from what the finance minister is saying is whether or not we are going to see a delay or perhaps this uncertainty looming large when it comes to tariff wars, that affecting investment decisions. Is that something that's happening because of the tariff wars or something that we've seen for a considerably long period of time? Let's break this down with market expert Ajay Bagga. He's joining us on Business at 9. Great to have you with us as always, Mr. Bagga. What's your sense of the state of the Indian economy right now? What's the real reason why we are hearing the finance minister say this about the impact of tariff wars, the uncertainties, and how we are seeing private capex, and we are looking at some of that data coming through from ICRA, which says that the private capex share in the economy has dipped to a decadal low of 33% in FY24.
Yeah, thanks very much for having me, Vikram. Delighted to be on your show, as always. I think what is very clear, if you see the WTO report yesterday, they spoke about a 3% dip in global trade this year, a fall of 3%, which is massive because the global trade in goods is about $33 trillion out of $110 trillion global GDP. $33 trillion is shipped at least to one country, if not to multiple countries in the supply chain, in the processing part. The second big part came in with IMF today raising an issue saying that tariffs will lead to slower growth. Very interesting, yesterday, Vikram, Bank of Canada, while holding interest rates despite inflation falling, they gave two scenarios. So, like our sell-side brokerages give a base and a best case and a worst case, or companies these days, we saw some airlines in the US giving 2 to 3 outcomes. Yesterday, a central bank gave two outcomes. That one, if 10% gets settled, then what is the slowdown like? And if it's 25% with China, then the kind of recession that will set in globally. Bank of Canada had very interesting, outline on that.
Yes.
So our finance minister is merely, assessing the same situation globally. Where we get off in India is that being a hugely domestic consumption economy, that saves us. But we are resilient but not insulated, like we saw in 2008.
Yes.
Up to a limit, we can hold our own. But then, thanks to the linkage with the global financial capital,
Yeah.
the contagion comes into our economy as well.
Exactly.
So she spoke about flexibility as well as domestic investments. As far as the private capex goes,
Yes.
that has been on a declining curve because we have a huge output gap in the economy. What that means is you have a factory which can make 100 goods a day. You're already running at 80 goods or 75 goods. So you are not going to set up a new factory to make 100 goods more
Yes.
until you at least reach 90, 91 kind of a struggle.
Yes.
And then if you have this exports going off, or you have a global slowdown in goods trade, then all the more reason
No
that
incentive.
business sentiment gets
Yes.
impacted. So I think whoever was going to invest also is postponing by 3 to 6 months.
Yeah.
That let's get some more clarity on the global picture.
Yes.
Because if the US sneezes, despite all our resilience, we won't be fully insulated. Some contagion will come into India as well.
Yes, but Ajay, in September 2022, I remember the finance minister saying that, is it like Hanuman that you don't believe in your own capacity and strength? That's what she said. This is the time for India, she also reiterated, and the government is willing to hear the industry and act on what you give us. We cannot miss the bus this time, she said, and lose momentum. So at least the last 3 years, the private capex, we've seen it be below par. Now with this tariff disruption, I'm just wondering how much worse does the private capex scenario really get when it's already so low?
Yeah, again, we have excess capacity. So it's not that we are short of goods. It's not a supply issue that the economy faces. It's a demand issue. We have seen even on the consumption side, rural demand picked up a bit, but urban demand has been pretty low. And so what we really need right now, the heavy lifting is done by monetary policy. And you see with the new RBI governor, what he has done is injected a lot of liquidity. Now we are surplus on a daily basis of about 150,000, 1.5 lakh crore odd. We are surplus, and that is flowing through easier financial conditions. So we have not seen the issues that, say, Europe is facing with tighter financial conditions, or the euro dollar markets are facing with tighter dollar conditions already. India is not facing that. But we are not seeing new proposals on the scale that we really need to grow at a 10%, 12% nominal growth kind of scenario. So that's what the
Yeah.
finance minister alluded to. Traditionally, Vikram, what you would do in such a scenario is have the public sector and the government do the heavy lifting, which we are doing with the
Which is
11 lakh
actually
crore
happening.
capex. We
Yes,
are setting the backbone.
exactly.
But we need to now really unleash. It is a 91 moment for India once more, with the global order being reordered,
Yes.
and it's ours to lose. So
So
clearly, if we get a lot of reform stimulus,
that is what I
fiscal
mean.
you have cut back,
So we
monetary
have to wait for the
stimulus is
reforms to
there.
come through.
What is needed is reform stimulus.
So we need a reform stimulus, is what you're saying, Ajay, because the government, like you're saying, we've ended up see the government do the heavy lifting when it comes to capex so far. And you also said some of that heavy lifting has taken place by the Reserve Bank's action on interest rates as well. But when you look at the overall picture, the reforms push, I'm just wondering now, is it going to be a knee-jerk reaction? What else can the government do by way of hand-holding? Because these exporters would find themselves at sea right now. And we're talking about investment decisions getting delayed because of all the uncertainty.
Yeah, and also the Chinese dumping.
That too.
If you look at the March numbers of China, their global exports went up 12%. There was front loading. So everybody got in Chinese goods before the full tariffs came in. But 14% increase in monthly increase of exports to India. So year on year, 14% up for March. That is very worrisome. If you look at where are the Chinese ships going now, Vikram? After April 2nd, a lot of Chinese ships are now calling on UK ports. So the Chinese goods are being dumped into Europe via UK already. And India saw 14% increase of Chinese exports. So the real big risk is China is this factory of the world which can't sit idle, which has to keep churning out goods. It will start dumping goods at the marginal utility function, at the marginal cost. They will start selling goods around the world, which can create a huge deflation. And that's why you have the fear of a recession
Yeah.
coming in. Uh, if that happens, Indian industry will need protection. So, we have to raise some barriers to Chinese goods coming in. We have a massive trade deficit with China already. And if that starts growing at 14, 20%, it's a big issue.
Right.
Second, the PLI has to be really increased. If you look at the balance sheets of Chinese companies over last 10 years, 15 years, the kind of subsidies they got were like 10x, 20x of our PLIs. So we need to put in more.
Yeah.
And third is easier tax, easier GST. We need to cut GST immediately to lead to a consumption boom. You can do some other easy things to put money in people's hands. Income tax is done. But if you cut GST, that immediately on consumption, it starts having an impact. And then industry needs a reforms package. That is very clear. The corruption on the ground is very strong. That is the big trouble for the SME, for the smaller industrialists. The
Yes.
big guys can manage everything,
Yes.
but the small guys are really stuck in a quagmire.
In fact, that's what ICRA's report is saying as well. It's not the listed players who have a problem when it comes to private capex. The majority of them are the unlisted players. And one wonders, because you're saying as far as these reforms are concerned, whether it's on the taxation front or whether or not we are going to see that many more protectionist measures to safeguard, against the kind of dumping that we're expecting. All of these means that the government needs to act very swiftly and adeptly. What do you think is likely to happen on capital flows right now, Ajay? You track those. Do you think any kind of reassurance is coming through from the finance minister because as far as actions are concerned, now that's going to really reassure them. When it comes to the policy stability that the finance minister is talking about, is it going to help contain FPI nerves, especially after the recent equity outflows that we've seen?
Yeah, FPIs are turning, but the tax remains an issue,
Yes.
especially for sovereign funds, pension funds, endowments, which don't pay tax anywhere else. So for them, this marginal tax is a very big issue. And I hope egos don't come in, and at least we can provide them, like senior citizens can fill up a form, that 15G and 15H forms with the banks, and they don't get TDS on their interest income. Like that, you should allow at least the entities which don't pay tax in any jurisdiction, they should be allowed to function in the country. That will be a huge reform. SEBI already, with the new chairman, has done some very wonderful things. He's trying to ease the regulatory burden. All his speeches also he's talking about that. But that 50,000 crores limit that they increased, those kind of things are needed. You have to free up. You have to free up the markets, like what Dr. Manmohan Singh did in 91. This is that moment for India again, but it's not at a crisis time. It
Right.
is a slowdown, but not a crisis. Normally, we work best in a crisis. So I don't foresee a crisis because you have domestic capital formation, you have government finances which are good, you have banks which are sitting on a lot of strong balance sheets, and corporates which are deleveraged. So it's really ours to lose. We can create
Yes.
100, 150 global winning companies at this time. That should be our aim, and every ministry should be tasked with this. That build up 5 more textile companies, build up 10 more X companies, Y companies,
Yeah.
and put more PLIs and ease the regulatory burden.
So unleash
Cut
animal
GST
spirits.
immediately.
Yes.
Yeah.
So you're saying that we are not in a moment where we are pushed against the wall, as it were. But here is an opportunity, and if we don't kind of tap into it, then we miss out. There is a huge opportunity cost over there. But about these supply chains, Ajay, India has been pitching itself as a credible China plus one hub. But in this world of tariffs and retaliations, where do you think we currently are, in your understanding, to push that agenda ahead? Because you did mention capacities, and you think that we do have them right now in place, but we require a larger push, even from the private Capex side. Are we seeing enough being done?
Yeah, see, private capex is always a follower. They don't lead. The
Right.
government leads. So the government puts in money in the economy. That starts a virtuous cycle, and then the private capex starts coming. So right now, when your factories are not running at full capacity, second, you don't know where your orders will go into. So even if you say it's not an 83 billion US market which is under threat, it's the 450 billion goods exports market which is under threat for us, because China in every category has a scale of 10 times of us,
Right.
and it has cost economies at a tenth of ours. So, and they're ready to dump right now to ensure that nobody else builds capacities. So that is the thing that's happening. We have to recognize that. First, erect barriers against China so they don't dump our industries out of existence. Second, look at what is the pain point for the small industries, MSMEs. They are the real ones who create jobs and who really spend. The
Yes.
big guys take care of themselves. They have, alliances right at the top. Everything works for them.
Yeah.
It's that mid-tier guy who has to deal with 20 inspectors and 20 vultures coming in on a
Yeah.
monthly basis,
That's right.
including the local, thugs. So those are the reforms that are really required. And I think what we have to see is this is money well spent. If you can give tax breaks, you can cut GST, get a virtuous cycle of demand flowing, and
Yes.
then the capacities start getting constrained. And there you see that private capex comes in, make bank credit easy for them, give them subsidies if they are investing in India, like Andhra just did.
Yes.
The land they are giving at 99 paisa. I
Yes.
think this Chandrababu Naidu of the mid 90s, this
Right.
is what he did when I was setting up a big 24/7 call center.
Yeah.
Chandrababu Naidu himself used to meet us, and he
Right.
would say, "How many jobs will you give? This is the subsidy. Everything done. I'm giving you electricity. Anyone stops you anywhere, ask 1 rupee bribe, come back to me."
Right.
That's how he used to be,
Right.
and he's doing that again.
Right.
That's how competitive federalism is working.
Yes.
But we need it like 100x. We need
We need
100
100x, and
Chandrababu
we need
Naidus.
it at the central level, and of course at the kind of land reforms, labor reforms, that entire push that is required, the taxation push as well. Now, those are the kind of moves that the government needs to be seen really making, so that we are able to put up that private capex, because you said it is going to follow. Private capex is something that follows, and all these are required up front. Whether it's tariff tremors or global trade recalibration, the message from Min Street to the Large Street seems to be clear that India will have to stay nimble, and this it will have to do to remain investable as well. And policy predictability, it is perhaps our strength, but the global tide is shifting fast. But Ajay Bagga, it's always a pleasure getting in your sharp insights, getting clarity on this. And yes, Ajay, you wanted to say something before we close?
Yeah, and one very big thing which has changed over the last 30 years, nearly at least 6 to 8 states, Vikram, now have a $1 trillion GDP vision document out
Yes,
there.
yes.
So from Karnataka to Tamil Nadu to Telangana to Andhra, then Gujarat, Maharashtra, UP.
Yes.
What Yogi ji is doing in UP is massive. And
Right.
if UP is Brazil in population, but
Right.
our GDP is sub-Saharan Africa.
Yes.
If you can transform UP,
Yes.
you can. The India story is done, because
indeed.
you have pockets which are very good in the south and in the west. But if UP does that $1 trillion, they are
Yes.
at 500, 600.
Yes.
So the vision documents are there. The clarity is there in the senior bureaucrats.
Right.
Now we have to execute.
Right. We'll wait for that to happen, but we shouldn't be waiting too long, because the time is now, like you said, and it's an opportunity that we don't want to miss. Ajay, thank you very much for joining us on